Over the past few weeks, the market has been treated to some fireworks thanks to Reddit's Wall Street Bets forum. A few stocks have mooned the internet, the term of big search. Among them, video game trailer GameStop, GME, is up 750% year to date. AMC Entertainment 960% higher than the beginning of January. BlackBerry 179%, Mall Retailer Express EXPR 346% and Nokia NOK 25%. News updates and what happened and what the current situation is and if you should participate in these speculations, I will tell you in this video. Hi folks, this is Björn from Becoming Financially Independent, where I will help you to understand more about finance so you can make sound financial decisions by yourself. I will upload practical videos every week about finance, saving and investing. So consider subscribing. Just now news came in that the broker Robinhood does not allow anymore for us to buy stock when they were mentioned in Reddit and blocked them basically. So you have to find another broker if you want to participate. Wall Street Bets from Reddit have achieved their goal in a joint effort that drove GameStop shares to unprecedented heights and broke the hated Wall Street short sellers in losses of billions. Short sellers, also known as shorts, sell borrowed stocks and speculate on buying them back later at a cheaper rate. The difference is your gain. And what short selling is and a short squeeze, I will explain right now. Short selling with leverage is a technique that many traders use to make a quick buck, amplifying a small amount of capital in the hope of amplifying their gains. If you want short selling explained, here's an example of it in action. For example, Dave has been eyeing up the stock in Lemon Industries, which is currently trading at 75 bucks. He firmly believes that its value is going to plummet imminently. So he decides to get involved with a short selling in the stock market. He borrows 150 shares worth a total of $11,250 and starts short selling by offering these shares to another buyer. And then David waits. Let's imagine that his short selling strategy pays off. A fortnight later, Lemon Industries announces that it has had its worst financial quarter on record. That combined with a multitude of other factors sees its share price fall 40% to 45 bucks. William spots his chance. He decides to buy back the 150 shares at this price and then he returns them to the broker he borrowed them from. Given that they cost him $6,750, he's left with a gross profit of $4,500. Commissions fees will likely eat into the sum a little bit. To open a short position, a trader must have a margin account and will usually have to pay interest on the value of the borrowed shares while the position is open. Also, the Financial Industry Regulatory Authority FINRA, which enforces the rules and regulations governing registered brokers and broker-dealer firms in the United States, the New York Stock Exchange NYSE, and the Federal Reserve have set minimum values for the amount that the margin account must maintain, known as the maintenance margin. If an investor's account value falls below the maintenance margin, more funds are required or the position might be sold by the broker. But what is a short squeeze? Or what happened to the hedge fund Melvin Capital versus Reddit's Wall Street Bets at GameStop? A short squeeze occurs when a stock or other assets jumps sharply higher, forcing traders who had bet that its price would fall to buy it in order to forestall even greater losses. Their scramble to buy only adds to the upward pressure on the stock price. Short sellers like Melvin Capital, as you can see, were so greedy that they shorted GME over 100%. They borrow shares of an asset that they believe will drop in price, in this case GameStop, in order to buy them after their fall. If they are right, they return the shares and pocket the differences between the price when they initiated the short and the actual sales price. If they are wrong, they are forced to buy at a higher price and pay the differences between the price they set and its sell price. Short sales have an expiration date, so when a stock unexpectedly rises in price, the short sellers may have to act fast to limit their losses. And with their attack on GameStop, the forum members already flattened a prominent short seller. The hedge fund Melvin Capital, led by the industry shooting star Gabriel Plotkin, amassed a 30% loss of its total capital due to the rally in GameStop shares. The two industry titans, Citadel and Point72, had to help out and fund 2.75 billion. It is questionable whether this injection of money will be enough, because even with other bets from Melvin Capital, the course turned to the disadvantage of the hedge fund. The shares of BioNTech Group Evotec AG shot up 30% at the start of trading on Wednesday. Before trading calmed down, the Warta shares and the titles of the Polish game developer CD Projekt also rose by a good 8% each. According to Reuters' new agency government, documents showed that Melvin Capital had sold all three stocks short at Evotec alone. The hedge fund had shorted 6.2% of the shares. Market participants indicated that Melvin himself could be responsible for the price gains, because in order to close a short position, the investor must buy back the borrowed stock. But regarding the news of GameStop, GME, the US news portal CNBC reports that the hedge fund Melvin Capital closed its short position on GameStop on Tuesday afternoon. This is what fund manager Gabe Plotkin told CNBC. The price swings at GameStop are currently on everyone's lips on the stock exchange, but it can be even more violent. The shares of the cinema operator AMC Entertainment were quoted on Wednesday at a peak of 962% higher than at the beginning of January. In addition to Reddit users and Robinhood traders, AMC also had a positive company report at the beginning of the week. Due to the corona pandemic, AMC is still fighting for survival. On Monday, however, the group reported that the financing of ongoing operations could be secured well into 2021. This means that all rumors of an impending bankruptcy at AMC are completely off the table, said CEO Adam Aron. But it's also clear that the group's problems are far from being solved. But AMC, like GameStop, became a target of the Reddit community. According to FactSet, 24% of the shares are currently sold short. The hedge funds that are short on AMC have recently come under considerable pressure due to the enormous price increase. Their buy-in purchases fueled the rally again and ensured the insane performance. And currently the same happens to Nokia and BlackBerry. The list of other stocks hotly discussed at Wall Street Bets could go on and on. However, investors should consider at least 2, more likely 3 times whether they are participating in such attack just because a stock is badly sold short or small enough by the market for Reddit's Wall Street Bets to trigger such a stratospheric flight doesn't mean there will. But in my opinion, it is awesome to see what we, the ordinary people, can achieve if we stick together. To wrap this up, it also seems clear that these fundamentally unjustified bets, because the company is not worth that much, right, will go down at some point. As a Wall Street quote is, what goes up must come down. So please, before investing, consider everything what you have heard so far. But if you do, and wish you all the luck in the world. If you liked the video, give me a thumbs up and subscribe to this channel so that you don't miss another video. Thanks for watching, focus, and don't get greedy. See you next time.